Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q4 and FY26 post-earnings conference call of Hariom Pipe Industries Limited. Today on the call from the management we have with us Mr. Rupesh Kumar Gupta, Managing Director, Mr. Amitabh Bhattacharya, Chief Financial Officer, and Ms. Rekha Singh, Company Secretary. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risks and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended March 2026, the growth plan and vision for the coming years, post which we will open the floor for Q&A. Over to the management team.
Good afternoon, everyone. I welcome you all to the earnings conference call of Hariom Pipe Industries for the quarter and year ended 31st March 2026. This is Rupesh Kumar Gupta, Managing Director of Hariom Pipe Industries. I hope all of you had the opportunity to go through our financial results submitted in the stock exchange. I would like you to, our investors, analysts, bankers, customers, suppliers, employees, and all stakeholders for their continued trust and support. Our focus during the year was not only on growth, but also on improving the quality of growth. We consciously worked towards reducing working capital intensity, improving cash conversion, and strengthening the financial position of the company. We believe that disciplined approach will support the company's growth trajectory in the coming years while ensuring that growth remains profitable, cash generative, and sustainable. In the steel industry, volatility in input prices and demand cycles is a normal part of business. However, our integrated operations and diversified product portfolio provided us with flexibility to manage such market conditions. Our presence across multiple product categories and geographies helps us serve different customer segments and reduce dependence on any single market or product. During the year, our galvanized product segment continues to contribute meaningfully to the business. The company also continued to focus on strengthening its market reach across southern and western India. Our dealer network and institution customer base continue to support our sales and distribution strategy. FY26 has been a year of steady performance, improved operating discipline, and stronger cash generation for the company. During the year, our focus remained on improving the quality of business, maintaining margin stability, strengthening working capital management, and improving overall balance sheet position. The key numbers and ratio for FY26 are as follows. Full year revenue from operations 1667 crores. Revenue grew up by 23% YOY, supported by better throughput and value-added products. Full year EBITDA 209 crores. EBITDA grew by 19% YOY. Full year EBITDA margin 12.56%. Margin remained broadly stable despite competitive market conditions. Blended EBITDA full year 7,258. EBITDA per metric ton improved during this year. Full year profit before tax 104 crores. PBT grew by 25% YOY. Full year profit after tax 76 crores. PAT grew by 23% YOY. Q4 revenues from operation 507 crores. Q4 revenue grew strongly by 27% on YOY basis. Q4 EBITDA 64 crores. Q4 EBITDA remained healthy with stable margin and 31% growth YOY. Q4 EBITDA margin 12.59%. Q4 margin improved compared to Q4 FY25. Q4 PAT 30 crores. Q4 PAT improved significantly on YOY basis with growth of 75% YOY. Full year value-added product contribution 98%. Full year operating cash flow 192 crores. Strong improvement in cash generation from operations. Full year EBITDA to OCF conversion 92%. Full year net debt to EBITDA 1.65x. Leverage improved and remains comfortable. Debt to EBITDA 0.4x indicates control leverage with adequate net worth support. Full year ROCE 21%. Return profile improved during this year. Full year ROE 12%. return on equity remained healthy. On the subsidiary side, our renewable energy SPV Hariom Power and Energy Private Limited is executing the 60 megawatt AC solar power plant awarded under the PPA with MSEDCL. The project is progressing in phases. Land acquisition has been completed for 8 locations, covering approximately 123 acres, and work has commenced at 6 locations. We have also incorporated Metal Mart Private Limited, which is presently at the initial setup stage. This entity is expected to support our future business initiatives in trading of metals, steel, and allied products. Our key priorities from FY27 will be improving capacity utilization, strengthening the value-added product mix, maintaining working capital discipline, improving operating efficiencies, optimizing financial cost, and generating healthy cash flows. We will continue to focus on profitable growth rather than only volume-led growth. Before I conclude, I would like to place on record my sincere appreciation to the entire Hariom team for their commitment and hard work during the year. I would also like to thank our customers, suppliers, bankers, shareholders, and all the other stakeholders for their continued support. Thank you.
Thank you, sir. We'll now begin the question and answer session. All those who wish to ask a question, please use the option of raise hand and we'll invite you to ask a question. You can also put your questions in the Q&A box. We'll wait for a moment till the question queue assembles. We'll take the first question from Mr. Sagar Shah. Please go ahead. Sagar, you are unmuted.
Sagar, we are unable to hear you.
Hello, am I audible?
Yes.
Yeah, sorry for the delay. Actually, there was some system issue. Now, sir, my first question for today was actually related to your guidance. In the last quarter, you had given a 30% 30% growth for volumes in FY27. Now, if I see the numbers for actually for this year, for almost all across all the value-added products, even on a blended level and even on product-wise, actually, we are clocking at least above 60% utilization. So still, actually, do we stand for by this guidance or we want to revise that guidance? And in that question only, what would be the EBITDA per ton guidance that you would be guiding for this year? Then I'll be highlighting. I have other two questions also.
Last year guidance was 30% volume growth year-on-year basis, which we have given. Demand on the basis of that ground, that capacity available, demand visibility, and internal business plan at the third point of time. During the year, actual volume growth was lower mainly because we consciously focused on profitable and cash generating growth rather than chasing volume and lower margins. FY26, if you checked, was also impacted by a competitive steel market environment, volatility in steel price, and sudden product mix decision. Instead of pushing volume aggressively, we focused on improving the quality of business, maintaining EBITDA, discipline of cash, strengthening working capital. So
Okay, I agree, sir, that means we chase for value rather than growth. But for
Yes.
FY27, I was asking, do we have the capacity to clock 30% growth YOY?
Yes, we have the capacity. We have the capacity. Still, whatever the existing capacity we are having, we can manage whatever we have achieved around 288,000 sales volume. We can go around 30%, but that is also subject to the market condition as well as Hariom cannot compromise with the profitability and margin. And push sales Hariom is not doing.
Okay,
There
and
is
EBITDA
not.
per ton guidance, sir?
EBITDA, current year, we are having around blended EBITDA is 7,200, and we are taken into the consideration, which is a very good EBITDA, blended EBITDA. The product mix, if you are taken, then this product mix also at far from the market level. So we are into the consistently focus on that, and we are very much confident to remain in it, maintain this ratio. And we are always trying to add on the value on that.
Right, sir. Right. My second question, sir, was related to the closure of the Tamil Nadu plant. The Tamil Nadu plant was closed due to the concerns related to Tamil Nadu Pollution Board. So is the plant open, sir, right now?
We are waiting for the order. Everything formalities and compliances are completed, and the file was already moved. We are waiting to the opening order from the department any point of time, maybe another 2 to 3 working days. Within 2 to 3 working days, we are
So
expecting.
what was the reason, sir, for the closure of the plant that they stated? And what is the
That is
revenue loss
actually
that
not.
we do in this quarter?
No, during the April month, we have whatever we have achieved in the last year, April 2025, the same turnover we had done in the April 26 also, because we have already enough stocks, and at the same time we are doing the business through asset-light model. So therefore, no sort of in the April month, no sort of impact is coming in terms of revenue.
Okay, but what was the reason, sir, that they stated for the closure of the plant?
That is actually from our side, there was no non-compliances. That is due to that elections and all those things. Not only Hariom Pipe, Hariom is a listed company. That's why it is coming to your notice, because we have given into the stock exchange. There, that is the Industrial Growth Center. So many units in the other segment also, they have sending the similar notice. Hariom is one of the another company. So that is the government election time. They have taken certain decision.
Okay, okay. Sir, my last question, sir, was related to the solar power plant.
Yes.
The solar power plant, we have done around 10 crores of investment also in this quarter, in this Q1, I am saying. So I wanted to understand that what is the total capex that we are going to spend in FY27 related to this project, and if any related to other projects also. And I think so for this purpose only in the balance sheet that you have created right of use assets. So wanted to understand the basically the roadmap for this solar power project, and how when will the revenue start occurring actually for us, because we have already done the PPA, if I'm not wrong.
Yeah, so basically I have corrected that the right of use assets which we have disclosing in our balance sheet, this is not the related with Hariom Power. This is related which we have last year, we have acquisition of Alfa Pipes pipe unit plant under the long-term lease model. That is the reason that ROU assets we were seen that in our balance sheet. First of all, first clarity. Second part is whatever you said that around 9.68 whatever it may be, that amount we have invested. So that actually in the previously also we have clarified that the total project cost is some around 241 crores, and the bank term loan will become around 195 crores. So remaining our investments are there, and that is totally backed by capital subsidy from the central government. So therefore, there is no as such a long-term investment plan. Only hardly 25 to 30 crores will be invested as a equity component in Hariom Power by Hariom Pipe. The remaining component will be reimbursed by the capital set up by the capital subsidy from the central government. So far, our almost all out of 13 locations, we have take up the project on 8 locations, and out of that 2 locations is yet to be commenced the power productions by the end of this month of the coming month. So out of 60 megawatts, already the 38 megawatts we are doing the projects, and remaining will be completed in the meantime. The ensuing.
So the production, what we mean to say is the production will start from the coming month itself, and the phase wise it will come down.
Okay, and till date, what is the amount that we have put in this project, sir? I understand they will be getting back the subsidies. I get your point, but what is the amount that we have put as of now?
You're asking about the total investment, right?
Yes.
I will tell you. So far, we have invested 9.56 crores total.
Okay, and how will the pricing work, sir, here? Basically,
Sorry?
how will it flow through our EBITDA?
So per unit, we are getting around 3 rupees 21 paisa, apart from capital subsidy. So as and when it will be generated, that is the fixed tenuity, and fixed revenue will be coming.
Okay. Per unit. Fine, sir. Fine. Thank you and all the best, sir.
Thank you. We'll take the next question from Pranit Reddy. Please go ahead.
Hello, sir.
Yes.
Two questions on Perundurai and demand side. So first, dealers serving the southern market from
Pranit,
Telangana.
your voice is not clear. We are unable to hear you properly.
Pranit, your voice is cracking.
Hello, sir. Is it fine now, sir?
Yeah.
Yeah. Firstly, dealers serving the southern market from Telangana instead of Perundurai adds freight cost and lead time. How many dealers have you lost to competitors since the plant closure? And what's the win back cost and timeline? So, and second, OEMs like customers like Ashok Leyland weight environmental compliances heavily in supplier approval. And TNBCB closure order is precisely the kind of event their ESG audits and flag. So has the closure triggered any requalification or anything on B2B side, sir?
No, there is no requalification or something which is there from Perundurai plant. From Perundurai plant, it was only the commercial products what we were supplying to the Kerala and other areas of that states. And there is no impact on that because we were holding some stocks also, as well as, as our CFO told that it has been like OPEX sort of model wherein we have manufactured the material from other sources and sent it across to the dealers. So we have not lost any dealers. Indeed, we were having very healthy arrangements with the dealers, and they have even supported us in a long way.
Okay, sir. And any dealers we've lost or to competitors in suppose like markets like Kerala or something?
No, it is only 1.5 months, right? So first of the complete month, whatever the stocks were there, we have only supplied those of the stocks, and few could have been undoubtedly as per the requirement of them. Few could have been taken from the competitor. This happens, so we are not worried on that. Our dealers network is very truly loyal with us, and they are continuously supporting the company.
And you've noted that value-added products are already 98% of revenue. So what's the next tier? Like blended EBITDA per ton was in FY26 was only marginally up year on year, which suggests that current product mix has largely played out as a margin lever. So are you entering any new adjacent or higher value product categories, and specifically which will drive the EBITDA per ton from here?
Yeah, so Hariom is already in a consistent growth parameters in the profitability and the margins. And we look forward for every time the OEM growths and the value-added products only. As we do not find ourselves to be in a very competitive market, we have a strong brand value, and for which all the OEMs or any good dealers promote Hariom brand, as well as they also encourage the profitability and shares us the valuation for that also. So 100% on the EBITDA part, we will be growing continuously. Our area is not the volume, our area is always a profitability.
So thinner gauge, something like thinner specifications, or what will be the EBITDA pattern? Like,
This
what will drive the EBITDA pattern from here?
This will be the minimum one, what we are looking forward at. And moving ahead, whatever the OEM contributions and value-added product contributions will add on, the EBITDA will obviously grow.
Okay.
See, fourth quarter, if you see, our blended EBITDA was 7,800. Okay. And throughout the year, you can check that is coming 7,258. My
Okay.
point of concern is, as you witnessed for various time in the last 4 quarters, the steel price fluctuations are happening.
Okay, sir.
When the raw material fluctuations are hugely happened, and along with that, the supporting system like gas, oil, electricity, logistic costs are going ups and downs. There will be no flat manner or no in a precise manner. Therefore, it will be impacted to your EBITDA. It is not anybody's hand. It is the market scenario and situation that we have to understand. In the Q4, our blended EBITDA was 7,800 rupees.
Okay, sir. So
If
what's your target?
If you go with that last year, March 25, EBITDA, Q4 EBITDA, that was 6,583. From 6,583 to 7,800. So almost 1,300 rupees we are increasing in the Q4
Okay, sir.
versus Q4 year-on-year basis.
Okay. So what will be your guidance for next year EBITDA pattern FY26?
So if at all everything goes well without the geopolitical issues and the scenario on the pricing hit and other things, so we feel that this will be the minimum one and this should continue.
Okay, at least 15-20%.
See, growth
parameters in any percentage would be very tough. Undoubtedly, as I told you, this would be a constant push from our side to increase the EBITDA only. This will undoubtedly this will continue. Our efforts will continue to grow it.
You
Okay,
have to
sir.
understand this is not a monopoly market and this is not a MRP based product, consumer product. MRP based consumer product where you have to, on the basis of MRP increase, you can say that there's a profitability will be increased. It is all on market demand and supply.
And my third question is on downstream side. Would it make sense to set up lighter pipe conversion of finishing units closer to your major OEM demand clusters, like by the central plant, something like a hub and spoke model that cuts freight and lead time? So which will get you closer to the customers like Ashok Leyland or any B2B customers. Is that something you are evaluating?
Generally, whatever transportation or logistic happens with the tonnage basis. So, यहाँ से if all we are sending it to Ashok Leyland, one of our again one more subsidiary or a sister concern or whatever. Again, the logistic cost from this place to that place has to be made. Loading, unloading, everything will be again a problem or an investment. So it is better to have one regional place, and from there only the supplies should happen so that we control the quality and be a constant player in supplying the qualities as well. Deliverables should be very good.
Okay. And any update on
I take your point in a very positive note. We have never witnessed this kind of thing, as OEMs are not demanding anything. They are getting everything on time. So if some demands are coming from their end, obviously we can think over it.
Okay.
Pranit, I request you to come back in the queue, please.
Yeah. Okay,
we'll take the next question from Deepak Poddar. Please go ahead.
Hello, am I audible?
Yeah.
Thank you very much, sir, for this opportunity. So, just wanted to understand. I mean, this EBITDA per ton. I mean, the guidance that you have given is not dependent on the market price. I mean, that's what I personally feel. I mean, at 53,000 ASP. A similar 12.5% EBITDA margin can give you 6,500 kind of a EBITDA per ton, and at 61,000 ASP, at same EBITDA margin of 12.5, it can give you 7,600. So guidance in terms of EBITDA per ton. I mean, more right would maybe to give outlook in terms of EBITDA margins. I mean that gives more sense. I mean, because in spite of higher prices, your EBITDA margins you have maintained. I mean. So I personally feel that EBITDA per ton might give a wrong notion that your profitability is increasing. So that's what my sense is. So if you can throw some more light on margin front, that would be helpful.
So Deepak, generally what happens whenever the markets are getting grown up, we have the pending stocks as well, which are there lying under for the lower cost also. As we are having MOUs with all the suppliers of us, primary players, so already those MOUs and other effects will also be added to the company. So it is not that one only particular point ki the prices have increased. That's the reason only we add on the EBITDAs or something. But it is a continuous effort, and if at all this has been maintained, it's on the merit basis of our own understanding for the value chain.
Okay. So EBITDA margin, anything on EBITDA margin also you can comment? How should one look at
EBITDA
a
margins
margin?
are sustainable. Basically, whatever is been shown in the numbers are there. So these are the sustainable things, and this will continue as we are focusing only on our profits.
And 12.5 to 12.6% is kind of a sustainable margin.
Yeah, they are sustainable.
Oh, understood. And now with our value-added product also 90% of our revenue, right? So will it be right to say that our revenue growth should mirror the volume growth? I mean, earlier what we have seen that your revenue growth has been much higher than your volume growth because your value-added product has been increasing. And now with we are almost at 100%. So volume growth and revenue growth should mirror each other. I mean, would that be a fair assumption?
So if at all the value is getting grown up, obviously as per the percentage, the revenue will also be on the limitation of that percentage only. So I think that will, if all the revenue is getting grown up, obviously the EBITDAs and other things will be constant on the percentage size. But again, on the numeric side, it will grow.
Okay, okay. I got it. And on the capex, I mean the solar power, I think we have 240 crores is the capex there total for 60 megawatt.
40 to 45.
And how much debt we are taking there?
190.
We have taken 195 and it will be set up another 30. So net debt after completion, the project is coming around near to 160.
Net debt is coming to 160. So this entire thing will come in FY27. I mean the corresponding depreciation of this plant as well as the interest cost corresponding to this debt will start coming from, I mean, has it started coming or will it come from next month?
It will be coming impacting FY27. March 27 is the last deadline to complete our entire 13 location 60 megawatt AC projects. So out of 13 location, we have almost start of the project 8 locations and 2 are yet to be coming for commencement, and remaining will be completed within this financial year.
Within this financial. Okay, okay. That's very clear. And this last thing from my side, in terms of our backward integration, I think we currently are at a 50% rate in terms of backward integration of our capacities.
40% you can say.
40%, right? So any plans to increase there? I mean, that will can help your EBITDA per ton or EBITDA margins to improve.
Yeah, that's already in place basically. So yes, we are also waiting one single EC order from Government of India. If at all we get that I think immediately the things are in place, we can plan it out. Just waiting for one EC document.
EC, so I mean
environment clearance.
Yeah. So that plant is already in process of construction. I mean,
no. We cannot do without getting an approval from the government. We cannot start any construction. So majorly the works are completed initially only. But after that we have stopped everything. After getting this order only, it has to get started.
Acha, and how much time will it take?
Another 3 to 4 months of time once we are there in place.
3 to 4 months. And by I mean this 40% will become what? In how much time?
Around 80%.
80% what? 80% it will become in next 3 to 4 months, or I mean, so 80% what's the time?
This is subject to
department clearance and everything. We cannot assure you right now. It is all are subject to, yes, we have a future business plan, and whenever Hariom will expanding, definitely they have submitted all the intimations and everything in the stock exchange.
Okay. And how much?
Thank you, Deepak. I request you to join the queue.
Yeah. I think this was the last thing. It is just a clarification.
Please. No, please. We'll take the next.
Let him finish the question, Deepak. Just take your last question.
Yeah, I mean, it was just continuation of that. So this 40 to 80%. So what benefit it can have in our margins?
So the margins would not be a very big thing, but only the quantity and the quality and the consistency of the supply for the raw material will get improved. The major
I
part
got it.
on that particular thing will not be on the number part, but again, indirectly it will attract some number. But genuinely speaking, it will attract the quality and the security of the raw material.
Got it. Got it. That's very helpful, sir. I would like to wish you all the way. That's it from me.
Thank you.
Thank you so much.
Thank you. We'll take the next question from Kashish Gandotra. Please go ahead.
Thank you, sir, for the opportunity. Two questions from my end. Firstly, if I see quarter on quarter, I think our volume has grown by 20%, while the revenue has grown by 40%. So, is that the correct estimate that the realization has gone up by 15 to 16%?
Quarter on quarter. Sorry, can you repeat once?
Yes, sir. So, I want to know basically what is the volume growth quarter on quarter? 20%. Is that correct?
Yes, quarter on quarter, 40%.
That is the revenue growth, sir. Volume growth will also be 40% or no? I think that is 20%.
Volume growth is coming around 20% quarter on quarter.
Okay, perfect. So basically, realization has gone up by 15, 16. And sir, in terms of FY27, what is our volume guidance for this year?
For this year, we are having around roughly you can take 350 to 360 in between.
Okay, 350 to 3. So 20-25%.
Yeah, depend on the market situation and global perspective.
Okay, sir. And how has been the current quarter been? Like, are we seeing some 10-15% growth on a YoY basis?
Yeah,
or no?
current quarter is good, sir. Current quarter is good. Current quarter is good. So far, it is absolutely good.
Okay, so we can expect at least quarter one to have that 15 to 20% volume growth on a YoY basis, right, sir?
Number at this particular stage, I think, would be not appropriate.
We are trying hard, but maybe we can achieve.
Sure, so just last question then. On the solar business part, sir, so do we expect there to be some burn for the first 1 to 2 years, or no, that will be break even at least in the first year itself?
No, actually, it's not called burn, sir. Whatever in the first 2 years, that is depreciation. As you know, that depreciation is not the expenditure. It's a cash accrual. So depreciation part is coming, which help you to generate the cash and at the same time safeguard the income tax. Nothing else. So profitability part, because you have to understand that the income part is fixed per annum and the operational are very negligible. Expenditure are there in the solar power business. It's a long-term investment and long-term revenue. Fixed revenue without any incremental operational expenditure.
Got it, sir. Perfect, sir. That's it from my end. Thank you.
Thank you. We'll take the next question from Asta Singh. Please go ahead.
Hello, I'm audible.
Yes, Asta.
Thank you for the opportunity, sir. Sir, I just have a few questions. We had faced a Tamil Nadu population control board issue in one of our plant. Is there guidance for FY27 keeping the volume disruption for Q1 in mind?
No. Actually, that already in the first question also we have explained that, ma'am. So that is not the case. The case was different in the pollutions and.
Your question is regarding to what exactly? Is it the numbers that you are talking about or what exactly is your question? Can you repeat, please?
So she's asking if our FY27 guidance keeps this stoppage in mind.
No.
Stoppage cannot be there for this long, actually. We have already in the verge of getting this document.
So far, we are not facing any sort of issue or any volume terms because we have the stocks and we have managed and we are getting the order within a few days from the department and we will start the operations.
Okay. And how are you compensating the loss of the volume from the facility?
No, so far we are not facing any sort of loss, means any sort of shortfall in the volume. That's why that is my submission. In the April month, whatever volume we sold in the FY25, the similar volume we have achieved to able to supply to our customer from in FY26 also. So therefore, no shortfall are coming. because whatever stocks we have, that was already dispatches, and after that we had started the process from the asset-light model from there only, from other facilities, and supply to our customers. So it is not impacted to our volume target.
Okay, sir. So I just have one more question. The recent supply disruption in gas impacted several companies. How much were we impacted in Q4, and what do you anticipate in Q1? And what steps have you taken to overcome these challenges?
To touch wood, we have not been impacted by the gas, which means we were having our own, the suppliers and other things are intact basically. So we have not faced any shortage or any disturbance in the supplies. So we have the storages, so we do not have any problem to see in future also.
Thank you, sir. We'll take the follow-up question from Pranit Reddy. Please go ahead.
Sir, what is the B2B contribution for the last quarter Q4 FY26? And what is your expectation going forward for FY27?
Earlier it was 15%, now it is become increased up to 20%.
Okay, in Q4 also it is 20%.
Yeah.
So what's your expectation going forward, sir, next year? And
So see, B2B means you are supplying to engineering companies or OEM. It is not like that you have to add onboard the dealer. It's not similar
yeah,
to
it is a continuous process.
so it is taken its time, and gradually our target is to increase this B2B clients.
This is an ongoing process.
Ongoing
So this will never get stopped in Hariom. So our team is very aggressive in getting things done. So already very good players are there in the company's portfolio, and we are continuously in process of adding on new.
Okay, sir. Okay. Thank you and all the best, sir.
Thank you.
Thank you. All those who wish to ask a question, please use the option of raise hand. You can also put your question in Q&A box. We'll take the follow-up question from Sagar Shah. Please go ahead. Sagar, you may go ahead. Yeah.
Yeah, thank you for the opportunity. Sir, I had two follow-up questions. My first question was related to the volume guidance that you have given, that you are confident of, means at least on the profitability front of at least clocking 350,000 to 360,000 tons of volumes. So what will be the product mix that you are targeting? Will it be, because already our Tamil Nadu plant is closed, and definitely our Q1 will be impacted. So means are we targeting the demand is good for MS tubes, or is it for GP, or is it for GP pipes? Because scaffolding has been relatively weak in this entire year. I'm not talking of this quarter, but for FY26 the volumes have been quite weak actually. So what is the product? What are the products that you are confident of actually getting this growth number from?
So firstly, because of the scaffolding, as you rightly mentioned, it's an credit-based business. So we have just shifted our wings to get it in advance and then only do it. Hence, the reason of getting it lower volume is because of the credits what we are not planning to give. Secondly, for the mixture of the products, it is all mixture of coils, it is mixture of MS, and it is mixture of GI. Moving ahead, whatever the B2B sales are getting happened are for that particular line. So our major focus will be B2B only, and the regular and consistent supplies to our dealers and adding on more dealers is going on. So the process from distribution ship model to the dealership model is the end goal of Hariom. Henceforth, we are continuously adding on new dealers, and our range and the states and the approach of the dealers are getting a bit higher than compared to every quarter.
Okay, fine, sir. And my second question, sir, was related to the solar power project. You highlighted that around 38 megawatts of production of the commercialization of capacity will happen from next month. That is effectively from Q2.
No. We have given the 10 megawatts commencement will be happened in the next month, and we have taken over out of 60, 38 megawatts ka work is under progress.
Okay, so out of the total 60 megawatts, is it safe to assume that 10 megawatt will the production will start from next month?
The total sanctioned capacity as per the PPA is 60 megawatt. Out of 60 megawatt, we have started to commencement of the construction and the power plant for 38 megawatt. Out of 38 megawatt, 10 megawatt is coming to production commencement in next month.
Okay, so out of that 10 megawatt, exactly I'm saying, sir. So basically, out of the 10 megawatt, the pricing is around 3.21 rupees per unit. So approximately, can you quantify
Yes.
that how much revenue can we get from that project at least in this year of 9 months of FY27? What is our target from that project?
That is very difficult right now to calculate and give it to you. As and
Okay.
when it will be started physically, and then we can give the correct estimate for the year. Along with 10 megawatts, subsequently other projects is also pilot project will be completed. So total FY27, how much it will be coming, that will be given on the first quarter. We can able to give on the first quarter.
Okay, and sir, my last question, sir, was related to the Metal Mart subsidiary. In the investor presentation, you have mentioned that we haven't actually commenced the business. So, when are we actually looking to start business in that? And can you provide some visibility that have you found any feasibility in the Maharashtra business for trading business?
Already we have taken and tie up with the companies who are manufacturing facilities. We have registered our apply for GST registration in Maharashtra in 2 to 3 places. We are waiting for the GST registration from Maharashtra. And similarly, we are doing in southern part like Tamil Nadu and Telangana also the GST registration process. And we are also tie up with the suppliers as well as the customers. So therefore, as and when we will get the GST registration from all the place on part of India, we'll start the operations.
Okay, fine, sir. Thank you, sir. Thank you, sir.
Thank you. Anybody wishing to ask a question, please use the option of raise hand. Or you can put your question in Q&A box.
Since there are no further questions, we can close the call. Can
Yes,
we
sir.
request the management to give their closing comments?
Closing statement. Hello.
Yes, sir. Please, your closing comments, please.
Okay. Thank you. Before we close, I would like to thank everyone for joining today's call and for your continued interest in Hariom Pipe Industries Limited. We remain committed to building the company with a balanced focus on growth, profitability, cash generation, and long-term value creation. Our efforts will continue towards strengthening our operating efficiency, deepening our market presence, and maintaining financial discipline. We sincerely appreciate the support and confidence all of our shareholders, investors, analysts, and other stakeholders. Thank you once again for your participation. We look forward to staying connected and updating you on our progress in the coming quarters. Thank you.
Thank you. Thank you to the management team and thank you to all the participants for joining on this call. This brings us to the end of this conference call. Thank you.